You will not only have clarity on how to start a franchise journey, but also will help you gaining access to curated franchise opportunities that suits your investment range and location. Feel absolutely free to ask your questions. We will take those questions once the presentation is over. Now, I would request Soni ma'am to take the lead and let's get started.
Thank you so much, Bharat. And friends, a very good morning to all of you. I welcome you again on Investor Advantage webinar, which is hosted by Franchise India. And like Bharat said, this is a webinar which is specially curated for both seasoned entrepreneurs and also aspiring entrepreneurs who considering to start their business or maybe a new business if you're already running one. And this webinar is about taking a very important decision in your life, which may be only once that you would take in a lifetime. Unlike many other decisions, or I would say investment decisions, that you consider to take more than once. And this is the decision of starting your own business. And we understand, especially for a first-time business buyer, there are many questions that needs to be addressed and answered. So at Franchise India, we've been in the business for the last more than 27 years, working with entrepreneurs like you to help them and guide them to take an informed decision of buying a business. And at the same time, we also understand a business buyer like you does not just require product information, but a lot of deeper insights before they decide to start a business. And buying a business is also one of the most difficult decisions of a lifetime. And hence, it requires a lot of thorough research, a thorough understanding of various nuances, dimensions, which can help you make a successful decision to start a business venture. So it is important that you invest your time to know enough about the opportunity, the industry at large, and you've studied that enough. So this was the grounds for us to come out with the Advantage series, which is called Investor Advantage, how a prospective business buyer investor like you can be an advantage of taking a responsible decision to start a business. So this particular webinar would give you guided assistance in buying a business. As we understand, a business buyer like you would move through a series of purchasing cycle before deciding on a particular brand. And being an investor-centric and a franchise-focused company, our focus endeavor has always been to advise investors like you on opportunities, and most important, to evaluate these opportunities, which are the right fitment for you. So at our group level, I'll give you a little introduction also about Franchise India. Some of you might know about our company and might be associated with us through our various platforms, including our exhibition, our website, or our smaller micro events, or maybe buying our magazine. So we've been in the industry for the last 27 years. Today, we are proud to say we are present in 97 cities in India, which means we have a team member, an advisor who spread across the length and breadth of the country. And our company is also present globally in about 15 countries outside India. And all these years, I think we have played a very uh, crucial role in facilitating business for nearly 10 million investors through our media company. And nearly 1 million investors where Franchise India actually worked with them and guided them through the decision-making process. And because the centricity of investor has been our core focus, we work to bring solutions for business buyers that are based on our methodology that we have followed throughout our journey to advise on the appropriate fitment of opportunity with your profile, with your investment, and various other aspects that we take into consideration, which actually blend together to take an informed decision. And we are also humbled to say that we have worked with this ever-growing community of aspirational entrepreneurs, which is today a very evolved community of business buyers, which has a lot of awareness about opportunities, brands. And I would say the last 27 years, even the investor community has come a very long way. And on the other side, we also work with the most credible companies into franchising, where we work not only with companies who are actively franchising, but we also work with companies who are getting into franchising for the very first time. And these companies are not just startup or getting into franchise, but this also includes a larger quantum of corporates today, corporate brands, which are also using our platform of Franchise India to expand and develop their franchise network, which includes the like of Reliance, the likes of Tata, the likes of Aditya Birla. So all these brands, which are the top, I would say, corporate enterprises of India, and equally the startup ecosystem would use our platform to reach out to potential partners like you. And over these years, I would say on an average, our company does almost about 10,000 franchise transactions every single year. And with an average investment of 50 odd lakhs. So you can do your maths to understand the kind of investment that we help raise through our investor community for businesses. And the investment range can start anything from 20 odd lakhs to about 100 odd crores, which is the case, especially with the high investment opportunities, especially in the jewelry business or maybe international master franchise opportunities. So bit, I've shared about us, but I'll also request all of you who've joined in to also share a little profile about yourself and some things, which I would like to know, because everything that we bring, and especially on these webinars and through our interactions, virtually through the webinars or physically through our events and meetings. Our teams actually research opportunities. They also search a lot of trends which are actually becoming mega trends globally. And we are sure these trends will become very, very big in a country like India. So we also seek a lot of inputs from our investors in terms of the opportunities they are considering. So I'll also request all of you, if you can share a bit about yourself. We have a Q&A box at the bottom of your screen. So a couple of things I'll request if you can share about yourself is first and foremost, the city that you come from. You'd like to know what locations you come from, because we have, like I said, our local advisors teams who can in fact meet with you. You can fix up a slot with them and maybe put up a virtual meeting or a physical meeting with them. I like to also understand your profile in terms of if you're already a business owner, if you run any form of business, whether that's a franchise business or a business which you have started yourself. Third is the category or the industry that you're considering to take or start a business in, which can be as broad as maybe an industry that you want to put. And if you want to be even specific and say you're looking at something in the QSR in F&B, or you're looking at something in jewelry in retail, you can go as specific as that. And then comes your investment, which means what is the kind of investment bracket you're considering. So these are four things I'll request, friends, if you can go in the Q&A box and write these. I like to maybe take up some names. It will help all your friends who have joined the webinar. So your city of interest, the industry category that you're interested in, your investment profile, and also, your experience of running a business, or is it the first time you're running the business. I think this would help us to get started. So I'll request all of you friends to start writing in. I think, all right. Is that you? You've written? Okay. So we've mentioned, friends, I'll request all of you, please go ahead and write. I see a lot of audience that has joined in, because it is very important for us to understand your requirements, and any questions that you have as we take you through the webinar, we'll be happy to answer that. So while you write that, I'll also, take you through a small presentation. And so this would be about 20 minutes of presentation that I would run you through. And post the webinar, the presentation, I would also invite Rahul, who's in fact leading the master franchise portfolio, specifically in the F&B space. So apart from what Franchise India does, where we facilitate businesses and we advise investors like you, we also hold the rights of 50 global brands. And these are brands from almost 20 global countries, including US, UK, Singapore, Malaysia, GCG. And these are opportunities because we felt these categories were becoming big and there was no category leader in these particular businesses in India. So, and because we understand the demand which comes from investors like you, we understand the market. So Franchise India took the rights of about 50 odd companies, and these investments that we have done are across different industries, which includes F&B, which includes education, skill development, retail, health, beauty, wellness. So we'll be happy to share more information, and Rahul will quickly run you through maybe 15 minutes through about 4 opportunities in F&B, which are today available in India, both in terms of a unit franchisee and also some areas which are open where maybe a bigger partner can come and take the entire rights of a particular area. In some locations, we've already sold the area franchise rights, but we still have an opportunity of certain geographies where the area rights are still available. So let me get started because the very first thing I believe comes to anybody's mind when they want to start the business is the industry right for them or not. Now there are only 3 ways you can start a business. One is your own startup, which is your own business, which can be generational business, your parents' business, which you might be running. The second could be a resale business, which means that you acquire a business which is run by somebody else and you acquire and run that business. And third is taking up a franchise business where the company actually passes on their systems, their training is imparted to the franchisee. So these are the only three ways one can run and start the business. So at Franchise India, we specialize both in resales. So we have a very big portfolio of opportunities and assets today, which are currently on sale. And these are profitable running industries, businesses across India. And there's a team called Business X, which can help you acquire these businesses. And the second is franchise business. So we manage almost about 12,000 companies. Their franchise expansion development is handled by Franchise India, or these companies you would be using some kind of platform of Franchise India, which means our exhibition, our conferences, or in certain cases, they would have exclusively given a mandate to Franchise India to represent them to franchise partners and bring the right fitment on board. So franchising, I'm sure you all would agree, is a very big impact market because everything that we consume today is coming from a franchise business. It cuts across every single industry. That's very important because a lot of times I see a question coming from investors, which is the best industry or category to invest. So if you look at franchise business, they cut across every single industry, and we've all seen successful franchise companies across all sectors. And India today is the second largest market in terms of the franchise market. And America is number one. And India is growing very, very fast in comparison to most of the top global economies. India has very strong economic fundamentals of domestic consumption. And domestic consumption is proportionate to the growth of franchising. So what we saw in the last 10 years, there was a four-fold growth that we witnessed from the time 2013 to, I would say, 2024. And the next 10 odd years, there would be a substantial growth in terms of franchise development. And the growth that we foresee, which we've already started seeing the symptoms and signals of, franchising will grow at 10x in the next 10 years. And the growth rate is very, very high, which is anything between 25 to 30% is the average rate of growth at which franchising is increasing every single year. And the size of the market today stands at about 180 billion in Indian market. And globally, this is a $5 trillion industry. So a couple of trends which are signaling towards the growth of franchising are very important to understand. I talked about consumption, but unlike what we were consuming 5, 10, 15, 20 years back, our consumption today has become more formalized. So this formalization of consumption which has started to happening. Brand consciousness, demand for branded products and services has become very, very large. We all witness modernization of retail with product industry becoming big in the last 20 years. And it is now the time where modernization of service industry also has started to become branded. So when I say service industry, everything from laundry services to D2C healthcare services, cleaning services, even the quick commerce services that we use, businesses like Zepto, these all businesses today franchise to reach to their and for fulfillment or to reach out to their end customer. The second area, which is also very crucial to understand, today there is a very big growth in terms of first-time business buyers. If I go back 27 years when we started Franchise India, the community of people who were actually starting business were largely people who were seasoned entrepreneurs or they were business owners, maybe traditional businesses, had some form of experience in running and operating a business. So out of 100 businesses that we used to sell, only 10 businesses were taken by first-time business buyers. But now this community has become very, very large. Today, out of 100 businesses that we sell, about 60% of these businesses are taken by first-time business buyers. And the last 10 years, this percentage has almost doubled. So which sees a very big growth in first-time business buyers. And not only the first-time business buyers, I would also say even the age group of the investors, the entrepreneurs who are coming forward comparatively is much younger than what we used to service 5 or 10 years back. Today, the group, our target audience, which is buying most of the businesses, including small businesses, area franchise, or even master franchise businesses, they come in the age group of 25 to 35-year-old. So let me take you through a presentation, friends. I'll request Bharat if we can put that on the screen. So while you do that, I'll also say starting a business is something which is not easy, and there is a lot of apprehensions, there are a lot of questions, especially for a first-time business buyer. But even more difficult is building a successful business, which is even a bigger and a very big challenge. And successful investing is all about your own alignment, the clarity preparation that you need to start a business. And for the first time business buyer, the journey is filled with a lot of uncertainties, and the need for informed decision making is even higher. So what we have done is, to support this journey, we have developed a very holistic framework that enables evaluation across 5 core dimensions for starting a business. And this is the self-assessment. Second is the industry assessment, and then is the market assessment where you want to open the business. And then is the competition assessment. And finally comes the assessment of the brand which you want to undertake. Next slide, please. And subsequently, we've also split that into 25 important sub points. So under these 5 assessment tools, we've also put 25 critical checkpoints, which are critical for every investor to evaluate, because sometimes you might fare in one particular assessment tool, but might not fare as well in the second assessment tool. So you need to have a combination of some of the critical points which are important for you to evaluate. So across these 25 points, if you have a total score of say 20 and above, then the opportunity is great. But anything 15 to 20 is also, I would say, a moderate opportunity. But if you have a score which is less than 15 odd points on this critical checkpoint list, we would not recommend you to take that particular opportunity, and maybe go back and rework on the entire assessment structure. At Franchise India, we have our advisors who are across the country who also work with investors to evaluate all these 5 assessment tools before we share any opportunity with you. So let me give you a small brief on these assessment tools. So first and foremost is your own self-assessment, and I believe that's the foundation for success, because your business will only be as strong as your own clarity of investment. So self-assessment is the most valuable tool for any aspiring entrepreneur. And here you need to define your own strength and weaknesses, and you need to have clarity about some of the key aspects, which is, I would say, overall investment appetite that you have, you want to invest, the kind of time that you have to commit to the business. And time commitment is a very important part, because 95% of franchise businesses require a franchisee to run and operate the business, which is franchisee owned and franchisee operated business. And second, 5% is largely franchisee-owned company operated, where the franchise partner brings in largely two fitments, which is his investment and maybe some kind of strategic fitment, which could be real estate property which he owns. But that quantum of business is comparatively very small, and the investment requirement, specifically if I talk about FOCO models, is comparatively large, which starts upwards of 2.5 crores and can go up to between 50 and 60 crores. When I talk about investments, especially in large investments like jewelry businesses. So for example, Indriya, which is a Aditya Birla Group, they have also launched their franchise opportunity for the very first time. They launched their brand last year, and now the brand is expanding also through a franchise footprint where they're partnering with like-minded people. But the partner brings in only the investment and real estate, which he needs to procure, which can be leased. But the company takes care of the entire operation. So it does not require time commitment of the investor. But largely, when we look at smaller businesses, the efficiency is very, very important, and hence time commitment becomes very, very critical. So what we need to look at is first and foremost the mindset, which is your own mindset. What is entrepreneurship meaning to you, and what value as an entrepreneur you bring in the business, and how you plan to sustain the business that you want to get in. Second is your financial goal. And here there are 3 important elements that we recommend everyone to follow. And I call that the TRR rule, which is T stands for time, R stands for risk, and the second R stands for return. So the time actually means the time to achieve your financial goal. What is the timeline? It is short term, is it mid term? Are you looking for a long term investment? Because that would define the kind of opportunities you want to consider. Because some businesses, they're long term businesses, they also have a longer gestation. So based on your timeline of achievement of your financial goal, our team then shortlist the opportunities. And second is the risk that you're willing to take on the investment. And third is your return on the investment expected. Now, if you look at different asset classes of investment, and I'm saying different asset classes across different assets, which could be your active businesses like franchise businesses, or even passive like maybe a property or a stock investment. Now, all these asset classes can be categorized only into 3 fundamental goals. And these goals are safety, number one, second is income, and third is growth. So these are the 3 goals only, irrespective of the asset class that you invest in. But these goals also mean, if you're looking at a business which brings you safety, it also is signaling that it will give you lower reward and lower returns, right? Income-centric businesses would give you moderate risk and moderate return, but growth-centric businesses might come with a little higher risk, but they are very, very rewarding. And some of these opportunities are specifically opportunities of an area franchisee or a master franchisee, but it also requires different capabilities apart from just bringing in the investment. And then comes your capital planning, which means you need to have an calculation in terms of and careful planning in terms of what kind of debt and equity you're bringing to the business. So when I say debt and equity, the thumb rule which we advise investors to follow is 50-50, which means 50% bring your own equity, your savings to the business, and 50% can be a softer loan that you can take. But any small investments that you make or smaller businesses that you want to make an investment in, when I say smaller businesses, these are investments under 40 odd lakhs. So try to bring in at least 70% of your own investment, and 30% can be a softer loan or a debt that you can take, because the cost of running a business, the cost of capital is very, very high, which makes sometimes running a business very, very complex. And then comes the assessment of the industry. And a couple of things which you need to evaluate here is overall the industry trends, the life cycle of that particular business, understand where the industry currently stands, look at the trends. It is important to see the last maybe few years, the 5-year trend in the industry. But more importantly is also to see the future fitment of the industry. Is it going to be relevant in the next 10 to 15 years or 20 years? So that's very, very critical. And also evaluate any historical patterns that have existed, which has helped the industry grow, or maybe, fail in some situations, any disruptions that we see in the businesses, any future shifts that you see the industry might undertake. And second is your growth prospects and demand supply gap. This is very, very crucial. And this is where most of us, in fact, fail, So when I say most of us fail, whenever we look for an opportunity, our assessment of what is the demand of that particular business in that market is very, very crucial. So you need to assess whether the market demand outpaces the supply. So if it does, then we are actually creating an opportunity. And in certain cases, most of the opportunities, businesses that we start, it is also a shift. When I say it is a shift, which means that consumers, the audience which is consuming these products or services, it can be a salon, it can be maybe a retail shop, it could be a dentist or a dental setup. It could also be, any education institute like a preschool. So even in the geography that you want to open, it is not that these consumers have these services not available in their market, but there has to be a reason why somebody would shift to the business that you are putting in that market. And there could also be a situation where the demand is high, but the market that you want to open, there is the market is underserved. There could be gaps in terms of product. There could be gap in terms of service. There could also be a gap in terms of technology or innovation, which your brand brings in, which is not currently available in the market. Now, if I take an example of tier 2 cities, tier 3 cities in India, they have a very high demand supply mismatches, especially if I look at categories like affordable services, education, mismatches in wellness, healthcare services, and there could be a big demand which is currently underserved. And then comes your market assessment, which means your go-to-market intelligence is very, very important. We need to look at and focus on areas which includes the overall total addressable market, which means how big is the total addressable market, which your particular brand, which you've selected, is trying to address in the market. And second is at what stage is the business in? That's also very, very important. Sometimes businesses are very, very, saturated, and they sometimes cannibalize in certain markets and they don't perform well. While companies have their own structure in terms of number of, maybe some kilometers, they give exclusivity to the franchise partner. But when the demand is higher, they also take that away. So when you look at the stage of the business, you need to look at, is the business new to the market? Is it at a growing stage, or is it already reached a mature stage? So when businesses reach a mature stage, there are very few markets they want to penetrate. We work with some of the most, I would say, mature corporates today. And sometimes when we get the requirements are specifically in territories where they don't have any partners. Even if I talk about distribution, or even if these are franchise businesses being run. So depending on the stage of the company, the market would respond to these opportunities. Consumer behavior is very important to understand, which means in your market, what kind of product or services are needed. And then comes the regulatory landscape, which means the licenses, the compliances which are required to run and operate the business. And these compliances are both a center subject, these are a state subject, which includes your licenses like your drug license, which is required for running a pharmacy, licenses like a bar license, which is a liquor license, which you need to run maybe a bar or a lounge or a restaurant. And every state would have different cost and regulations on these. So the company also assists you and advises you. But this is a very important regulatory landscape, which has to be completely understood by you. And then comes the real estate, which location, and this is something which can be extremely tricky because you don't know what location would the opportunity do well. So the thumb rule again that we follow in selecting a location is find your top three competition in the market wherever you want to open the brand, the selected opportunity. And out of these locations where these competition are present, you need to spot which are the top markets in your city where their performance is best, where their per square feet efficiency is highest. So you go and open next to them, right? So if you open next to them, your chances of success would comparatively be very, very high. Right. And then comes your competition assessment. You need to look at the competitive advantage versus the other competition in the market. We advise at least look at 4 to 5 opportunities minimum when you look at a peer-to-peer competition. And 4 to 5 opportunities can be a mix of maybe a player which is very strong in the local market. Second could be a regional brand, and third could be a national player who's present across various and very diverse geographies. So you take an advantage, a competitive advantage, which should include the overall offering, technology which the company is offering, the SKU mix, their addressable market, what is their per square feet efficiency in the market they are operating. All these will give you a lot of signals in terms of selecting the right opportunity. And then comes your assessment of the brand, which is the final assessment you have to do. After all that you have done, it is very important to understand the brand and take a lot of time to do evaluation of the brand that you have selected, because we believe not all franchisors are same. So you need to do your own research and get to know everything you can about the company. And this includes a lot of things, which means how long the company has been in the business, what is the average success rate of the company. So when I say the average success rate, and some companies might be in operating for quite a long number of years, but might not be franchising. That was the case with Chroma. I think they started franchising in COVID period. Our teams reached out to Tata, and they were all operating their equity stores. They were operating about 200 locations, and all these locations stores were invested by Tata themselves. And when we approached them, we started converting these company-owned stores to a franchise stores. So when I say the average success rate, it can be a combination of company-owned stores and also a combination of their franchise stores. And if the company has been into operations through a franchise expansion for more than 5 years, you should also understand how long the franchisees stay on an average in the system, right? So which means, are they staying enough? Are they moving out of the contract before the term is over? Are they been renewing that further? And if these franchisees also have taken multiple locations, so that is also a very strong signal of the support and the trust which partners have on the company. So companies like Eurokids, on an average, one franchise partner has 4 to 5 preschools, which is run by these women entrepreneurs. So understand these nuances. And the other things which are important to understand is obviously I would say standardization of their systems and processes, because as companies start to scale, they have to be more and more process oriented. It helps to bring them more operational efficiencies, and the franchise partners are trained on them. And then comes the operating cost and the reinvestment, which you have to understand very, very carefully. And I would say at least spend one full day to understand how the business is run, what are their operating cost, what is their margin profile. And different industries would have different margin profile, and different categories in the same industry would also have a very different margin profile. So when you do a comparison of these margins, always do an apple to apple comparison, right? So even in the same industry, a furniture would have a different margin, a jewelry business in retail would have a different margin. And even in jewelry also, a diamond to a gold would have a different margin profile. And then comes your legal agreement, because in India, we don't have any contract law, so to say, any laws on franchising, so to say. So we work on a British contract, which means everything that becomes a part of the contract becomes a binding between both the partners. So we come on the next stage. Next slide, please. So what we do at Franchise India, we work on our tried and tested process, which is a three-stage advisory process, which starts from first and foremost, I would say, exploration, because we understand that, with so much of opportunities that you see around, it is very overwhelming for an investor to decide what is right. So the very first stage is exploration, which is, I would say, the information stage. And how our teams work with our entrepreneurs, aspiring entrepreneurs, is we understand what is the right fitment for you. While we work with 12,000 companies and any new brand which comes into franchising, but we try to understand, evaluate your profile against four primary fits, which is strategic fit, which means what you as an investor or an entrepreneur is bringing on the table beyond the investment. And this could be a profile in terms of your education, any prior experience in the industry, could be the property that you own. And the second is operational fitment, which means the number of hours that you have to commit to the business. Third comes the market fitment, which means the opportunities which are right for the market where you want to open. And equally, we also, take into consideration the rollout of the companies. And then comes the financial fitment, which is the investment you're willing to put in the business and the working capital that you have in hand. So based on these four primary fitments, our team then curates opportunities, and then we come to stage two, where we dive deeper into the selected opportunities. And our team then starts doing discovery days along with the brand leadership, management, founders, including in-depth brand sessions, visit to their centers, visit to their outlets. All that is done by our teams. And then comes stage three, which is negotiation and closure. This is where a lot of personalization comes in, where our teams work with investors to structure the entire deal, which includes a lot of strategic insights, a lot of competitive insights, how the territory, in case you are doing an area franchise deal where you want to take a bigger area, our team would also get involved into planning this territory. And this is followed by LOI and the agreement. So right from stage one, where the options are explored, to stage two, discovery days are done with the selected opportunities, till the time you sign up with the opportunity that you have selected, our teams work with you through the entire journey of buying a business. So, friends, this is what I had to share with all of you. At Franchise India, we receive almost about 1 lakh inquiries every single month, and these are prospective investors who are looking to invest in business opportunities. But we work with very selected few, and which also means that we require a commitment from our investors who want to work with us, and which comes also at a fee. So, depending on the investment you want to make, also our resources, our level of resources, seniority of resources are plugged in with every single investor. And our registration structure starts from about 25 odd thousand, which is valid for 6 months. And if you're looking for a bigger investment, more insights, more reports, it goes up to 5 odd lakhs as a registration fee, which we can share with you. And I'll request now Rahul to take you through some of the important brands that I talked about, that we have at Franchise India signed up as a master franchisee. So while there are 12,000 brands that you will see on the website of our company, Franchise India, but more than 1,000 Indian companies have exclusive contract with us, where we are the only partner exclusively mandated by these companies to select their franchise partners, and about 600 international brands that we represent in Indian market and also the subcontinent and other markets that we have presence through another company of ours, which is Fran Global. So I'll now invite Rahul to share his screen. And friends, if you have any questions, please use the Q&A box. We'll be happy to answer your questions.
Good morning. Good morning, everyone. So, guys, first of all, warm welcome to the Franchise India, as ma'am said. So now we are coming with the four brands, and these are the four brands which is running internationally, and they are also expanding into the Indian market. So coming back to this four brand, the first and the most important is the support system. Okay, how the Franchise India will support you. So being a master franchisee for this brand, we are not only selling the franchisee to you, but we are also supporting you in terms of the development reason. So we need a strategic partner who can work with us, who can take the territory rights, and we can also help you in terms of the development of that region. So the development means we can support you in terms of the operation setup, we can support you in terms of the franchisee expansion through various channels. Since the Franchise India is one of the largest partner who's selling a franchisee. So these are the master franchisee where the franchisee India invested, and we are open for across all the part of the country. If someone wants to say, okay, I want to take the territory rights. So the territory rights which are available, we can give to you. The territory rights which are signed in that region, we are open for a unit franchise. So the first and the most important one, I can come with the smoothie factory. My screen visible?
It is loading.
Visible now?
Yes, yes, yes. Yes, it is visible.
So the first brand I can tell you is Smoothie Factory. So Smoothie Factory is basically health and wellness cafe. Because of the time constraint, I can just give the little bit brief, and then we are happy to discuss about in detail. You can directly reach to us, or you can directly reach to the Franchise India team, where we can discuss about this brand in detail, how we want to work together, what the things are arises. So basically, it is a US based brand from 1996, currently operating 300 stores worldwide. Since last year, they entered into the franchise India, and the franchise India is the development partner. We are not only selling the franchise in the Indian market, but we're also developing this brand into the international market. Now, the Smoothie Factory is one of the greatest brand in health and wellness cafe. The USP of this brand, we are using the 100% organic product, no preservative is added. If you compare any brand in the same category, not a single brand is available, I can proudly say, which is running more than 100 store or maybe a 50 store. So if you want to go to Mumbai, Chennai, or you can Surat, or you can come to Bangalore, or you want to be in Hyderabad, you can see our stores are like. So and in terms of the area developer rights, where the territory which is not available right now, but the unit franchises are available, the Maharashtra, or we can say the Tamil Nadu, Telangana, are not available as the master franchise. So if someone wants to take the unit franchise, they have to open a single store, and the 100% support will be provided by the company. The support system would start from the location hunting, where they want to start the work. Secondly, the hiring of the staff, training of the staff is play a very important role, and then the supply chain, the customization of menu, and apart from that thing is called as the project management. So 360-degree support will be provided by the Smoothie Factory India as well as the Franchise India team. So if someone would say, "Okay, I have an investment of 25 to 35 lakh rupees, can I get a unit franchise?" Yes. So 25 to 30 lakh rupees is the budget where someone can open for a takeaway model, where the people can come and they can grab the product. And such locations are in malls or maybe an IT hub, or we can go to the airports where the area requirement will be 200 to 250 square feet, are called as a takeaway model. If someone would say, "Okay, I want to open on a high speed, can I have a larger space? Can I open the Smoothie Factory?" Then we are open for that. For such thing, the area requirement will be 300 to 700 or 1000 square feet. So in both the model, the menu would remain same, and we are keeping the 10-year is the agreement period in a unit franchise. Let's take an example. If someone would say, "Okay, I want to take this brand as an area franchisee for Karnataka, Delhi, NCR, Gujarat, West Bengal, or maybe Rajasthan, or any part of the country which is available," we are happy to give the territory rights, which is known as an area developer right, or we can say the master franchisee right, where we have to work together, we have to develop this brand, and the franchise India will support that. For the area developer rights or for a unit franchisee, I love to discuss in detail because of time constraint. I can just give you the bit. And because you are entering into the F&B business, the royalty play very important role. This royalty will be deployed. This royalty amount will be applicable for your the operation support. So in a smoothie factory, we will take 8% as the royalty component, and that is on a monthly sale. But can I go to the second brand?
Yeah, please.
Okay. Now, with the second brand, I can say as a Burger Tory. So when someone says a Burger Tory, it is an Australian brand, and it is the first time in Indian market some gourmet burger chain is entering gourmet burger chain. If you go into the market, you see there's a lot of burger chains are available, but they are not a gourmet burger chain who is making the freshly prepared burger in front of the customer. So in this business, or is a Burger Tory, they are already operating a 50 store in Australia. Now they are coming into various part of the country through Franchise India. Franchise India is the master franchisee for Southeast Asia and the Indian market. So Burger Tour is opening into a Mongolia, Indian market, or Sri Lanka, or we are also coming to markets. The important feature for Burger Tour, the breads, we have a four different types of breads are available. We have a different types of patties are available, veg and non-veg, both options. Then we have other things. All things are freshly prepared in front of the customer. So this is the first time in the Indian market, any brand in a gourmet burger category are sharing the franchise, giving to a franchisee to the franchise partner. So in terms of the investment in Burger Tory, I can say the investment is very namely depending upon the which model you want to work. 60 to 80 lakh rupees is the budget. If someone would say, "Okay, I want to go with the bar concept," we have a bar concept also available in the Burger Tory, where the area requirement will be a little bit higher. It will be coming around 2,500 to 3,000 square feet, and the investment would be around 1.5 CR. That also include the your licensing fees for the liquor and along with the interior and whatever. So if I want to say, "Okay, I have an investment of 50 to 70 lakh rupees, can I open the burger tory for a gourmet burger chain?" I can say yes, we can open it, and the age requirement for that thing will be thousands of 15. Again, as I said, the F&B business will always depend upon the royalty because they have to support you day-to-day operation. They have to support you how to execute the process. And again, in Burgatory, we are charging 8% royalty with us. In Burgatory, we have an options available for a area developer rights or the territory rights. We have an option available for a unit franchisee. So different part of the country we are available. If someone say, "I want to take this brand as an area developer rights, can I get?" We will discuss in detail how the franchise India work, how the Burger Tory will support you, and what is the role and responsibility from the local area developer. Because they have to open the being an area developer, you are mandatory to open a cell phone store because without cell phone store, we will not allow to give the area rights. And in this four brand, if you consider the smoothie factory, Burger Tory, or I'm just coming to the next two brand, it is called as a franchisee owned franchisee operated model where we will support you in terms of the location, hiring, training, supply chain, marketing support, operations support. But in terms of the costing structure, when someone say costing structure, the rental, you have to bear the salary of the staff, you have to bear the electricity and the cost of material, and we will charge some royalty. But can I go to the third brand?
Yeah, please.
So guys, third brand I can say as a Donor Shack. It's one of the greatest brand in kebab and shawarma concept. And I can say, so we are already coming into Mumbai, Bangalore and Hyderabad, and we have already signed as an area developer. So we are opening our first store in Indian market from Bandra, which is in Mumbai, and one of the greatest brand in kebab and shawarma brand. It's a UK based chain operating 50 plus store. Through Franchise India, they are not only present in the Indian market, but they're also present in the various part of the world. They are opening into the US, Oman, UAE, and the Franchise India will. So it's the first time in the Indian market if any kebab chain in the QSR concept. When someone would say the QSR, meaning is quick service restaurant, is coming into the Indian this thing. So the donor shack play a very important role. The investment would come around 40 to 60 or 65 lakh rupees, depending upon which model you want to work. If you want to say, "I want to open for a takeaway model where the area requirement will be 300 to 500 square feet," the investment will be 300 to 500, and the area requirement will come around 45 to 50 lakh rupees. If someone would say, "I want to open with a high street concept where 700 to 1,000 square feet is the area," then the investment would come around 60 to 70 lakh rupees. When I'm talking about the investment, so in investment, there are three categories are involved. The first, always called as a franchisee fee, which is valid for a tenure, and after tenure, it will be renewal of an agreement. Second, there will be a capex cost. The capex cost is divided into a various structure. First is called as the layout, then the interior cost, the kitchen equipment cost, then the IT equipment, and then the training equipment and the training fees, and then there will be initial raw material cost. So in this way, so if you consider the total project cost, when I said the total project cost, so franchisee fees is always be a fixed component. Design and the training is a fixed component. Other are called the variable component. So in donor check, we are charging a nominal royalty of 8% on a monthly sale, and 5 year is the agreement we are keeping it. So out of 8%, 2% will be used on the national marketing. So we are open for a area developer right to various part of the country for the donor check, and being a franchise in India, they will support you in terms of developing your region along with your local support. So the last brand, not the least, the fourth brand I can say is the gravy for crispy chicken. So it's basically a South Korean brand. They are operating 150 store worldwide. If you go to Singapore or maybe you can go to Philippines, Mongolia, South Korea, these brands are available. They entered into the franchise India market in March 2025. And being a franchise India, now we are looking for a exclusive partner who can take the territory rights or who want to take the single unit. And you know the Korean concepts are growing into the Indian market. The K concept we basically say the people love. So it is just like a KFC where you have a juicy chicken is there along with the different types of cuisines are available. And all the beauty of this thing again we will support you, but the complete supply chain will be provided by, and we have an authorized vendor who can supply. So you will not worry from where you have to buy the raw material, from where you have to buy the packaging material. the 100% support system will be provided by the franchise India and the particular brand team. So if you're coming back to the financial, so what the brand look like? So we required an area starting from 500 to 1500 square feet. The investment will vary from 50 to 80 lakh rupees, out of which there is a one particular component is called as the franchisee fees that is valid for a 5 year. After 5 years, again the renewal of an agreement, no franchisee fees is applicable. In case of unit franchisee, and again here the royalty we are charging 8%. So guys, if someone wants to say you want to take this four brand, then typically ROI will be coming around 15 to 18 months. 5 year is the agreement rate. And the beauty is that this is one of the unique brand in the market. When someone would say the unique brand, they are already operating into their own international market. They are running more than 50 stores. They understand the Indian market. They understand the quality. They understand the taste. And that is the reason they took the franchise India support in terms of development. So Donor Shake, we are operating in 3 stores. We are coming. Smoothie Factory, we are already live 8 stores. We are coming with 10 more store in next maybe 3 to 4 months. In terms of the Krave Chicken, we are coming with a 2 store in the Indian market, and the burger too, we are coming into a different part of the country, Hyderabad, Ahmedabad, and Mumbai. So the different regions are available as a single unit franchisee as well as the area development. So if you want to discuss in detail what is the territory price, what is the role and responsibility, how the costing structure will be workable. So the beauty is that you can directly reach to us or you can directly reach to the franchise India team. They can directly connect with us where we can discuss in detail how we want to work, how we want to develop your region, and what the responsibility arises from the franchise India, who will manage the supply chain, how the supply chain will work. Each and every question will be answered by us. So thank you so much, Bharat, for your time, and thank you guys.
Thank you so much. Thanks so much, everyone, for joining, and thanks so much, Rahul. If you could also share your number in the chat box, if you have not done this yet. Right. So in case if anyone would like to go for these brands which we showcased today, you can connect with Rahul directly. And because he's the heading the Pan India business development for all these brands. So, I mean, you can get the best support from his side. So that's it for everyone for today. Next week, again, we will join, we will again be coming at 11 o'clock and we'll help you explore the franchise business opportunity with some few other brands. So thanks so much, everyone, for joining. See you
Thank you
next
so